So today's trade was really a continuation of yesterday's sort of movement of price. I could see we'd broken down. Oh, good morning, by the way, or afternoon, or whatever. You've got the low, the high, the higher low, the higher high. This is a daily chart. We've got the high, low, lower high, lower low, and continuation and close. Now, what do I always say? Look for the reversal. So this actually doubles up as an answer to a question on YouTube about the daily reversals from a chap called Noza. So this is a perfect example. So I'll start on the monthly anyway, just to clear my head, get myself organised. We can see we're inside this massive monthly bar, so there are no levels that I can draw on this, apart from this one here, which would act as resistance if the price was to go down. We need to close below that. Not sure where this one is. We'll put a high on it, just so that there. Oh, it's right down here, the high of that candle, so it doesn't matter to price. Oddly enough, it's acted as support to the pip with this red candle here. So nothing on the monthly. The weekly is pretty similar as well. Oh, we can look at the histogram, see what's gone on. Previous month is just confirming what that candle is, which is a massively bullish candle. So weekly, what's that telling us? Not a lot either. We're in between the high and low of this weekly candle. We've got a load of weekly candles here with no levels of support or resistance, i.e. highs and lows that are affecting price, that is in the middle here. So all we can look at is the histo. Histo is pushed up. With the previous week was green. This one is hovering around the close of the previous week's candle, so not a lot to be gleaned from that, in my opinion, apart from the fact we are in a steady uptrend as well. Daily, right, we're inside, surprise we're inside the previous day's range, high and low there. I've put those levels on, and we've broken through the previous support level here and support level here. Price wise, we haven't closed yet, obviously, because it's a daily candle, but the momentum has been to the upside. So here we have the reversal, the change of direction in terms of candlestick trends. We're now down, we're reversing to the long side, which is what we would have expected. Had I been up at 1 or 2 o'clock in the morning, I would have taken advantage of the long, and that is exactly what I'm talking about. Noza is that there is the perfect trade, and when it went the other way, low, high, high, low, high, high, and broke through some sort of resistance over here, then you'd expect to take a short. But you don't just fire a trade off willy-nilly, you use the lower time frames to enter the trade. So not a lot doing there. Oh, have a look at the histo alert again. It's turning green now, so that's just telling you we're in a pullback really. H4, now this is the interesting bit. H4 was a massive, well, I say massive, it was a big 4-hour candle, a big 4-hour move. It's broken this resistance again, and what do we expect on this instance? A short. So if you'd been up in the middle of the night, you could have gone long, and when you've got that 4-hour candle there, you could have gone short. So what do you think I might have traded this morning? This is the close at 6 a.m. We're 2 hours, we're 1 hour 22 minutes into the new candle. It's 7:21, 7:22, whatever. So it was just a question of, in fact, as well as using the reversals, I'm finding the histogram is working extremely well. So this is where we've overridden really the currency strength indicator, because we're getting conflicting arguments with New Zealand dollar weakness and pound weakness. So very difficult to use that. But this is where, once again, what I've always lived and breathed for the last 10 years, having spent the previous 5 years coming to this sort of method and improving year by year, is that the candlesticks always lead the way. And this thing is proving incredibly strong as well. So when this hourly closed weak red, we know the H4 is telling us we should be having a pullback. We know we cannot just hit the pullback willy-nilly, although there was probably a valid trade here, but it's way before I'm up and studying charts. So then we've had an indicator, if you like, that we should be thinking about shorts on the hourly. So then we can start to look into the internal candlestick reversal. And here we have the low, high, higher, low. Sorry, low, my mouse is playing up. Low, high, higher, low, higher, high. Then we have an engulfing reversal. Massively powerful engulfing candle, and it is a outside bar as well. Often they are. We've got a trend forming down, high, low, lower, high. We hadn't formed the lower low yet, but it doesn't matter. All we're trying to do is get something within this swing here. So I've got my 30 and my H1 low on there, and I could have actually treated this as an H1. I'd missed that actually. I've got to be honest. So this is why this went down with such vigour. I took a chance just trading this down on the histo alert. M30 green way before I entered. So it's just a question then of timing your entry to the short side. So I'll put my trade on the chart now. There it is there. You always want to be doing a short trade. You always want to be trading with two red falling candles, high, low, lower, high, lower, low, on as many time frames as you can to coincide with the colour change on this. And target for this trade, I took 9 pips out of it, just over 9 pips. I expected to have a bit of a problem with this candle here, and I expected it to have a problem potentially with the hourly 8 EMA, which is the 32 on the 15-minute chart. And obviously I don't enter on the strength of the 15-minute alone. I'm looking at the 5-minute, so you can see I've got a little bit of drawdown here, but there was every reason to enter. We'd broken the low there with this candle here. We'd actually busted, remember the bust and the break and close, so that was the powerful trigger on the RSI. That is solid gold as far as I'm concerned. You've got another one here actually, so this may well continue down a bit further, but coulda, woulda, shoulda doesn't come into the repertoire. It's all about doing the proper analysis right from the top to the bottom. So I got caught out by not losing the trade. So this is a calculated risk, because I don't want to miss the trade, bearing in mind I'm only going for 9 pips. But I do not want to get in too late or too early. So I should have watched the pullback as this break of support here. And, excuse me, if I'd have waited for the M1 pullback, then you could see you'd trended back against yourself. And it's continued on up. And this would have broken the 5-minute back up actually. Obviously there's more than 5 1-minute candles there. It did. It confirmed up here. So I should really have waited for a confirm down. You can see the candles there. And a confirmed down would have been that red candle there. Actually it's really played around this one, because then it pulled back again and then finally went down short. So this was a little pig, but I took my trade and then concentrated. I was happy with the higher time frames, so you can do that. It's a calculated risk. I said, well, you make your choice. You pay your money, you make your choice. but I suggest you take it down to the 1 minute if you can for practice until you get more experience, and then when you've got the experience you can hit them based on the higher time frames, because what do I say all the time? Higher time frames always take precedence. So when that 30-minute and the hour had turned red here, we know we're good to go potentially for the short. Could easily have gone up, but you know, that is experience, because I'm looking at the H4, big H4 candle breaking resistance. It's not that one that broke the resistance, because it might have broken it the high but didn't close above it. And what do we get when we break a massive level of resistance? We quite often, I think it's quite a high percentage, 60-70%, maybe more. Combine that with the candlestick analysis, you've got a high chance of getting multiple pips from the pullbacks. So not only did we get the pullback from the daily to the long side after this was broken, we got the pullback, so the pullback long, we got the pullback short as well, which was exactly what I was talking about in one of my tweets yesterday. Not only can you take them one way, but you can get them the other way. But you don't want to be getting involved in hourly candles, big hourly candles, unless you're just going for 1 or 2 pips and you really are experienced at this. So that's how to trade a big daily reversal, and how to trade, I'm talking about big candles and big levels, and how to trade a large H4 candle combined with the Frankfurt and London Open, which generally creates big moves, whether it be a reversal or a continuation. But that's why you've got to use something like this, just how I've described how to use it, and the different levels at your disposal, drawn on your charts every morning. Okay, thanks for watching, have a good day, and hope that helps you, Nozza.